Okay, now we have seen vendor clearing, partial residual payments, and withholding tax. Withholding tax is a liability that needs clearing. Now we have advance payments. Now, advance payments are required during business transactions and will be covering two um, areas like advance payments plus automatic postings for exchange rate differences. That will be our next segment. Okay, special geo. This is our module for advance payments. Now, advance payments basically are not directly a part of AP payables until some steps are performed. So the steps are FS00, we have to see 8842 recon accounts, and we have special GL 60,000 and 60,200. Okay, FBKP. We go to special GL. Account type is D, that is customer. We want for vendors, and K is for vendors. And we have down payments and down payment requests. Okay. So we'll work on the down payment request. Chart of accounts 8842. Recon account is 60,000. That is the vendor. And 60,200 is our special GL recon. Let me show the logic FS00. Okay, here we have recon accounts, special GL, local vendor, control data. This is a recon account for vendors. Okay, and purchase order will be your criteria for reconciliation. Sort key is used for reconciliations. And sort key populates the assignment field in a document, in a GL document. Reconciliation account is field status group. Okay, now the GL accounts are here. Save. Double 8842. Okay, this is done. This is request. Request will be put forward, and that will get promoted to down payment. So we have indicators F that indicates request for down payment, and A will be the down payment where the money will be exchanged to book an order. Okay, so double click down payments. Again, the same 60,000 and 60,000, 60,200. Okay, save, save. We're done with this. So we have tables T074, 74U, 74T. Let's see that first. SM30, T074. T074, find maintenance backlog, and continue. Okay, maintain. T074U, find maintenance dialog. No maintenance dialog. Okay. T, maintain. Okay. This is language DE. Maintain. is incomplete or not defined. Okay, let's go to SE11 database table T074 change. An original in logon language that is English. Okay, so what fields do we have in this chart of accounts? Account type. Account type will be customer, GL, vendor, indicator, that is request or down payment, reconciliation account, GL account number, account determination, planning level, planning is for forecasting. Okay, these are the fields. T, change, language, account type, special GL, short text, long text. Okay. U, change, account type, special GL, transaction type, noted item without balance update, list of target special GL, credit limit, warning messages. So these are the fields that are used in this table that make up advanced payments. So let's go and make an advanced payment, financial accounting, AP. Down payment, request, down payment and clearing. Three processes are required in down payments. First is request, reference, document header text, advanced payment, let's say 2000. Vendor will be AA42 is company code. The vendor in company code is tricolor 390. Target special yielding here because this is request. Request will get promoted into actual down payment, and that target is actual down payment. So that is A. Let's see the list. A, down payment, current assets, new item. Okay, amount is 2000. Tax code F7, calculate tax due on 31. This is 0 to 0106 2023. Now, this is the assignment used for reconciliation. This assignment field, wherever it is in vendor line item, GL item, this is used for clearing. Okay. Advance payment 2000. Okay. Payment method. Okay. Discount percentage, contract, flow type. All good. Display document overview. Tax base is 2000. 2000. Now, tax amount is 130. It is calculating. That means it will post to the GL account. 1869 will be the advanced payment. And let's post it. 1900 was posted. Okay. Yes, this was just a request. Now we'll go for down payment. Advance payment 10,000. Account 39010. Special GL indicator A. Account 10101. Amount 1. Text is advance payment 2000. Profit center will be automatically calculated. And over here, you can also generate new item and directly access F-48 without using F-47. But we have generated a request. So let's see what are the requests. Entry in the field value date is not permitted. Okay. Delete that. Request. One item was selected, 1900. Now, when it is selected, create down payments, 2000, continue, and we have petty cash 1, star, advance payment 2000, display document overview, and post. BST not defined. Oh, chart of accounts. BST not defined in T030K. SN30. T030K maintained. Maintain. Okay. Position. BST. Rules. Tax code. AA42. Accounts. It's maintained over. Oh, F7 is not maintained. Okay, okay. New entries. F7. Country PK. 80300. Save. Save. This is done. Post. Post. Enter. Document was posted. More. Document display. Okay. Profit center has been selected. Withholding tax 189,1940 has been paid. And your advance payment is already available. Okay. Now we'll go for outgoing payment. Outgoing payment 43. 53, sorry. 53. Clearing with advanced payment 2000. You can give a reference. Value date no. 10101 amount 1. Process open item. Oh. Account type K, account 390390. Process open item. Okay, didn't show us. Okay. What? 39010. Special GL indicator AF. Process open items. Okay, we have 2000 over here. AZ. Okay. So if I click this is in blue. I click it, it becomes black. So we have 12,000. I click it again and activate it. With blue, it becomes 10,149. Okay. So document overview, petty cash, double click, star. Okay. document, simulate 12,100, 1,000. No, reset. Okay. Choose open items. AF, process open items. 12,000, 10,049. Okay. And let's look at document overview. Process open items. 10,000 is in credit. 2,000 is advance payment. Post. 1503 was posted. More document display. 1049 was paid out. Withholding tax. Withholding from sales tax was carried forward. And this was carried forward. And we have paid the vendor. And let's see the account balance of this vendor. Open item, clear item, all items. In all items, we have special GL, notar items, part. What are notar items? I like rent security that you pay, so neither party can use it. It's just security. That is noted item. Execute. Mhm. Account is 1869 in credit. That 1869 can be job. 1869 advance pay, 1869 still remains somehow. But this is how you actually clear your vendor. Okay. This is clear to you now? I hope this is clear. Okay. FPKP. Next is automatic postings. We have automatic postings for various transactions. We have clearing for GL accounts, down payments, exchange rate differences. Okay. Bills of exchange, asset management, and we have other transactions, profit center clearing, offsetting account, and so on. There are a lot of adjustments that can be done using this transaction. Exchange rate differences. Okay, we have exchange rate difference using exchange rate key, exchange rate difference using open items GL account. Now, what are open items GL? Open items GL account are, let me just explore this first, then I'll tell you the concept. Double click this. Taking too long. Come on. Okay, now in this pop-up, can you see the pop-up? Can you see the pop-up? Okay, let me explain. We have options here, continue or change valuation area. Change valuation area. What is valuation area? Always value 801. Let's take this 01. Now we have okay. We have exchange rate difference key, expense account in case of foreign exchange difference key is foreign exchange difference is incurring an expense. Now, what is an expense? Let me also clear that. Exchange rate difference. To buy stock or material from a vendor for let's say $30,000. Vendor is credited with $30,000. This is purchased on 31/05/2023. And you have to pay on 10th of June 2023. Okay, it is at this point. Okay, 31st of May. Rate was 284. Bank rate. 10th June, let's suppose it becomes 280, 289. Okay. So your vendor pending amount is $30,000. The difference between 289 and 284 is 5 rupees. Okay. That 5 rupees, for example, in local currency, this was somewhere around, oh, let's keep it a little bit low. Let's say 30. Okay. To make it easier for us. Let's say 289 into 30, 284 into 30 is somewhere around, let's say 13,000, for example. Okay. Now, on 30th June, this 13,000 is now 800. 800 is your expense or loss. Okay. Now, for example, you are required to pay this amount not on 10th, but you have a payment term of 30 days. So this is payable on 01 July. Okay. At this time, now this is not paid. This is unpaid. Unpaid. So on 30th of June 2023, you have to book this expense as this is the prudential concept of accounting laws, accounting concepts, that when expense is realized, not paid, realized, it has to be absorbed or recorded. Okay, in that very month. So what you'll do, since this is unpaid, but you will book this expense 800 to foreign currency difference account 800 on what date? 30th. But this is not yet paid to the vendor. Why? Because this is called unrealized foreign currency differences. Okay. So you book this expense, this is absorbed in June. This is absorbed in June. On 1st July 2023, you reverse this entry. How? Foreign currency difference account to expense. So in in June, this is absorbed. It is realized as expense, but in July, it is reversed in July. So it is nullified because it's still unrealized. Unrealized means not paid, unpaid. But accounting standard says you have to book and absorb this expense in the month that was it occurred. Okay. So entry is on 1st July 2023. What will be the entry? Vendor debit $30, cash $30, credit. This will be in rupees 3800, 3800, and expense foreign currency difference, that will be debit as an expense 800. Okay, so your cash account, of course, will be paying more expense account. Difference, no, it will not be paying more, sorry. That difference will be charged to foreign currency difference account 800. Okay, now it will be, now this expense will be realized foreign currency exchange rate differences. Okay, now this will be an expense, and same goes for income. It's the opposite. It becomes a credit and this becomes an income. Okay, I hope this is clear. The concept is clear. This is credit and it's an expense. Okay, got it? So expense account will be given here, but will absorb the 800. The gains account will be the same. It is kept the same, but if the client wants, it can be separate. Rollings, valuations, valuation, revenue, and expense. So this will be cumulative account that will keep on rolling the amount that is collected. Exchange rate difference, I don't remember what we used to get. I'll have to check that. So we'll keep this for the next session. Exchange rate difference, open GL. Okay. GL account like withholding tax or maybe any other account. GL account will be given, currency will be given, PKR, be a balance sheet adjustment account. That will be a balance sheet account. And loss and gain will be given over here. And that's how it will be done. We'll do it in the next session. And then most of your FI will be closed and we will start with assets. Okay. Is the concept clear?